From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May the 3rd, 2016. Today we're going to be taking a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. First off, starting here on the daily time frame, it's clear to see that this currency pair has been in a downtrend for quite a long time. We go all the way back to January of this year. The currency started moving lower. We started a pattern within the downtrend. We've highlighted it with all of these boxes within the downtrend. The currency pair went into a congestion, found support, eventually breaking lower. Congestion, support, breakout. Congestion, support, breakout. And it's continued that pattern throughout the life of the downtrend. And in the most recent time frame, nothing really different. Let's go ahead and zoom it in a couple of times here on the daily time frame. And you can see we've seen that pattern continue over the past few weeks. We see support, a rally into resistance, this congestion or black box right here. Then it broke out lower down to the pink shaded area. And then it did something similar. It found support, rallied to the yellow shaded area, and then it broke out lower. So now we see support at the green shaded area at the very bottom of the chart between 25.15 and 25.50. That's the green shaded area at the very bottom. Over the past few days, we've been studying that as support. And I've said over the past few days in the live trade room that while it's at the very bottom of the downtrend, of course, like we've seen since January, it's been in a downtrend, it's difficult to go short and sell it. Now, we want to. It's a downtrend. We would prefer to go short, but it's difficult to do it at the very bottom of the trend. So if you're going to go short or sell it, the best opportunity, as we can see the last two incarnations of the pattern there, is that it goes up, rallies into resistance, and then you have the opportunity to go short. So in this case, what we're looking for is the market to rally back to the pink shaded area. That's back towards the 26.25 or so level into the pink zone. That's the last support. That's the red trend line. We can see that's the continuation of the pattern. So what I'm looking for today is actually for the market to go up another 30, 40, 45 pips before we have an opportunity to jump into this trade. Now, if you bought it at the green shaded area, speculating on a little bit of reversal or the continuation of the pattern where it finds support and rallies before going back down again, then of course you want to protect profit if you happen to buy inside that green shaded area. For those of us that are looking to trade the direction of the trend, all we're doing now is waiting for it to reach all the way to that pink shaded area, again, 26.25 or so, and then we look for an opportunity to go short. The risk, of course, the risk in this trade scenario is that it breaks above the pink zone and begins to change the pattern of the trend and go higher. So if we're going to go short, we want to do that as close as possible to the pink shaded area. Next opportunity to go short, if it doesn't make it there, would be the breakdown of the green zone, 25.15, and the continuation of the downtrend pattern. If we wanted to, we could take another one of those black boxes here, and all I use to draw those out are the rectangle tool here. I'm going to change it to a hollow box, make it the black color and a thicker line here, and we'll bring that box down here. So here's our next iteration of the pattern down here where we see it coming down, finding support, now rallying back. So if we continue the pattern of the trend, we're looking for, again, a sell here as close as possible to the pink shaded area. So what I'm going to do is go ahead and set this up as a trade scenario. I'm going to set it up as a pending trade order, and of course we're going to look to sell it, and we want to get as close as possible, like I said, to 26.25. So I'm just going to take and change this to 26.25, and so as it rallies there towards the pink shaded area, we'll be looking for an opportunity to go short. A continuation of the pattern would mean our target is the green zone, and then of course if it can break the green zone, our next target we've picked out is all the way down here towards the 2300s. 123.85 is the top of that orange zone. So that becomes a significant support target if it continues the pattern of the trend. And again, our risk is above the pink shaded area. So if it breaks above the pink zone, our stop loss will be above the 26.75 or so level right here near where that blue line is, but above the pink shaded area, because we know if it breaks above there, it's likely changing the pattern of the trend. We don't want to stay with it too long if it does that. So selling the pink zone, stop loss above it, targeting the green or the orange shaded area much lower for the USCAD this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.